This is the Tuesday commentary for the ICT mentorship. All right, so we had a little bit higher run than we saw on Monday. It is Tuesday, and it could potentially be pricing in a short-term high. I'm not trying to pick a top. I'm not trying to suggest that here at all, but I favor it going a little bit further higher than where we have it now, because there's an objective I would like to see met on Eurodollar, and you know what that is, obviously. But we don't try to impose our will on it. We don't try to force it, but you have to submit to the analysis and the targets in that way. If it permits it to be reached, then obviously that's the best outcome. So do we need to come back down in to this area here as an order block, fair value gap? It's possible. And if it does start to retrace and go lower, that's what I'm watching here. I want to see it pick up support in that area and also inside this fair value gap. And it's also the 96 big figure. So just watch that level. If we lose ground here on dollar, it doesn't change the underlying bullishness to drop down for a day or two. Okay, but I'm not trying to call the top, but I am concerned if we go below the order block, because I don't think it needs to come back down below here to get into this. Remember, I was mentioning this. I don't want it to come back down to this. To me, it's problematic. So it needs to find support up in here on this order block and inside this fair value gap if it does retrace. All right, here's the hourly chart, and just consolidation, slightly higher high, but just not doing much at all, just marking time. And on the 15-minute time frame, relative equal highs, buy side's there. A run up above it, take the buy side out, send it aggressively lower immediately after that. Not by much pips, obviously, but the rejection is seen there. So we have an imbalance, comes back up inside the imbalance there, then attacks this short-term low back into the order block there. We have low resistance liquidity run signature here that could potentially see it drop down below that at that 96.30 level. Again, be mindful of the 96 big figure. There's sell side down here, and any expansion down below that could tap into this area as well. But just be mindful that higher time frame daily chart, I don't want to see it lose that order block as I mentioned. Eurodollar daily chart, ever so close to our objective down here. I just would be satisfied if it can just touch the premium high of that old imbalance. I mean, if it never goes below that, that's good, that's fine. But even if it doesn't hit that, think about what we've been watching, what we've been looking for, and this is the draw on liquidity. And again, with this sell program that's underway, the institutional order flow being bearish, one up close day or two up close days do not change a trend. Like we had one here and then nice selling. We might be getting an up close day here, and then tomorrow another wave of selling that takes us into this range. So again, it's a weird feeling as a developing student trusting this, because it feels like you want to look at indicators and divergence, and it's been going down, so it's got to go up now. That you can't think like that. And submitting to higher time frame order flow is a skill set that is developed. You grow into that, and that's why it's important to condition yourself daily, taking annotations on your charts and journaling them and listening to what I'm saying here. Every time we have a commentary, I'm placing the emphasis on submitting to time, and that time element is the higher time frame order flow. Getting, hopefully, a higher time frame draw on liquidity, and even if it never really gets to the actual level we're looking for, submitting to that idea keeps you many times on side, not off side, not incorrect, not looking for the opposite bias. You're in institutional order flow. And right now, this might be just simply an up day, part of a longer term decline. Again, we're not trying to pick a bottom. All right, and we have again slightly lower low in here at relative equal lows. Took the sell side out, and then now we've consolidated. We have a small little imbalance here in the form of a sell side imbalance, buy side inefficiency. Trades up into that and then back down in, just consolidating. And on the 15-minute time frame, you can see that imbalance over here a little bit more cleaner. Bearish order block. Price comes up, goes right back into this area here, and breaks back down into this order block. We have sell side resting below here. The fact that we traded back up into this candle here, this can keep price at bay. So in other words, we could see it drop from here. I don't like this current market structure, admittedly, because it technically could punch up above here, hit that, rate it, and then start to melt over the course of the coming days. I'm not abandoning the bearishness, and keep your focus down here until proven otherwise. All right, pound dollar, daily chart. Before I get into this one, I want to take your attention back to the bearish order block. There's your premium array. We went from a high to a low to a premium market. PD array, bearish order block. Swing high forms. That's a high with a lower high to the left and a lower high to the right. Market should expand down. I took your attention to this low. This is a market maker sell model. This little fractal in price. Forget everything over here, okay? When you're looking at charts, especially your new students, you're back here looking for things to tell you something about that very next candle right there. What I'm trying to teach you is your focus is just right here, okay? And once it created this short-term high, I mentioned that we would look for a run to this liquidity here, and we got it. Now, that from the last 2 days is enough to be consistently profitable. But you're looking for market maker sell models and buy models. If you're a charter member, you know model 6 and 7. That's the closest thing to my personal repertoire. I'm looking for those setups that just repeat with this framework. This is what a market maker sell model would look like in the grand scheme of things on a daily chart. And we'll look at this whole pattern here. So what you're looking at is a low. It's rallying back up to a level that should offer resistance. If that's the case and you think it's likely to continue going lower, then you mark this up as a market maker sell model. And does it have all of the signatures that line up over here on the buy side of the curve before it makes the high? And then when you expect it to sell off, where should it reach for? The liquidity resting below that low. Here is that hourly chart, and you can see clearly the market maker sell model. Original consolidation, rally, accumulation, reaccumulation, smart money reversal, low risk sell, heavy distribution, mitigation, old imbalance. Just it's a level of distribution. Another level of distribution in here, sells off. And we have not taken out the original consolidation. And I mentioned this liquidity would be the draw. When we were here, it drew down to that. And then we have this run in here. For the second stage of selling in distribution that will target the original consolidation and sell side. I mentioned last night that if we broke down below here, then the next one would be here. We got that. It delivered another level of distribution, sold off aggressively into that sell side liquidity pool. On the 15-minute time frame, and this is all part of the sell side of the curve, here is your fair value gap, buy side liquidity, Judas swing, trades right up into that level there. So your range is high, low, premium market, premium array in the form of a fair value gap, buy side liquidity. Reason go up, take the buy stops and rebalance. Part of a market maker sell model that reaches for this low down here and just like gangbusters drops beautifully. Small little fair value gap there, comes back up into that, rebalances that. That's a short there. So you can sell here on the Judas, here on the rebalance inside of the protraction that takes the market down, breaks short-term lows. Now market structure is bearish for the intraday price action. Breaks down, small little retracement back up in. You can study this on a 5-minute, 1-minute chart. You'll find something that's illuminating there. Breaks down, and it finally digs into the sell side liquidity pool. Retraces, finds support at the old low, buy side balance, sell side inefficiency, and then back inside of the daily range. High, low, above, which is now in a premium market, and we'll see if it wants to continue going lower. But we're not twisting our candlesticks here to form a every day, every session setup. Okay, we're not contorting it and beating and torturing the data to give us a setup every single day. We're waiting for the obvious ones, and if it's not obvious, we don't do anything with it. All right, it takes us to our homework. I gave you a Bitcoin 15-minute time frame fractal to study, and for homework, I wanted you to take a look at why this was a good area to be a short, and all of this down to this low here. What was the framework that would align all those things and make it possible? Well, add some lipstick to this pig. We have the high down to this low. So there is our short-term fulcrum point. So if price drops from here and takes out that short-term low, swing projections take us down to this level here. So that's one negative standard deviation. In other words, the range from this low to high is replicated from this low down. There's your objective that it should reach for. You have a breaker here, rallies up, comes back down. This is your smart money reversal, low risk sell, distribution, and second stage of distribution. So it's redistribution. That's what I've been teaching you. This is the unicorn. This is the thing you're looking for that's going to give you that big energetic run where it just completely cascades, running right for the orders, and it's just the beautiful part of trading when you're on side and you're part of that move. Sell sign imbalance, buy sign inefficiency, trades up into consequent encroachment of that, rolls over and attacks the original consolidation where the sell stops would be, and then reaches for the standard deviations as shown here. Now I'm going to take you up to the higher time frame. Here's an hourly chart. This move here, okay, this is the move that creates that market maker sell model and the original consolidation over here. So we have the run from this low to this high projected down. We have short-term low and then this old low here. So we have market maker sell model in here, a market maker buy model here, and then from a larger scale, we have the market maker sell model from here to here, and then finally cleaning out the sell side here. Notice how wild of a drop this is, and then completely retraces back up into this area here, rebalances, and then crushes them once more, and then one more time sweeping below it. This is a little exaggerated, even for my liking. Okay, so this one is one of those things that I talk about where the crypto markets don't give the same level of symmetry that futures and Forex does. This can be a little alarming, and because of this type of movement, it still hasn't been refined yet. So the delivery isn't smooth, it's not consistent, and it still has this sporadic, like neck-breaking type of whipsawing that it can tend to do, which is what I don't like. I don't like that. You don't see a lot of this type of thing occurring in Forex and or especially futures. So trading like indices and bonds and currency futures, you don't see this type of wild, freakish type of reaction and then still getting in sync with the sell model. So it's these types of things like this that make me not want to be a participant with live money trading the crypto markets. I know a lot of you in here are fans of this asset class and you've traded it and you've reported doing well with it. I personally, when I see things like this, it just doesn't bode well for me, and I don't like it. I don't feel comfortable trading them. I don't trust my analysis. Only the few times that I make it available publicly, you can see it. But for the most part, it doesn't provide me the confidence that's required for me to be as confident, for instance, like I am with futures markets and or Forex. And inside of the daily chart, I mentioned this on the YouTube channel, buy side's been taken here. We broke down and then failed to go higher and broke lower below the short-term low and then ultimately lower than this short-term low. So now what we have here is a high, low, higher high breaker forms there, and your eye goes right to this down closed candle. Extend it out in time. This is the market maker sell model right here. Think about what I showed you in the British pound versus US dollar, the cable pair. This is basically the same pattern here on its daily chart for pound dollar. This is the same thing that's being shown on Bitcoin. Original consolidation or low, rallies up, goes to a level that should offer selling. What am I showing here? It's going back to this old low here. Trading right back up to that level inside of the breaker that's bearish, and then it rolls over and goes down for the sell side liquidity there. So it's not as clean, it's not as pristine as it is usually seen in the Forex fractals and the futures fractals. Crypto's got a little bit of, it's got a wild streak in it still. And until it gets tamed, there's going to be lottery type wins that can be called. But as a consistent, really, really smooth price delivery that is just so precise and reliable, I'm not suggesting at any rate that futures and Forex doesn't have sometimes a whipsaw type of reaction to news or a lack thereof, but nothing to the degree of crypto. Like, crypto is on some financial crack. Okay, this stuff can do crazy stuff, and sometimes it makes absolutely no sense to me why it does it. Where in Forex and in futures, I kind of see what's likely to occur, and I can trust. If I'm wrong, I accept it. Here, there's no way for me to say I'm wrong and feel good about it and feel comfortable that I'm going to be able to do well in the future, because it still has a wild streak in it and it has not been completely reined in. I still see that gradually occurring where they're going to get complete control of this thing. And then once that happens, you'll see it start booking just like Forex and in the futures market too. But it's still, right now, it's just a little too wild still. And I like sharing the examples for you guys that are in here as fans of this asset class, and to spice it up a little bit and just get off of Forex and futures and just try to do something a little bit different. But it requires a lot of things like I'm showing you here for it to communicate to me that there's something likely to occur. I'm happy that I mentioned on the community tab on the YouTube channel that while we were up here that it could drop down and attack the sell side here. This is a market maker sell model in itself there. This whole pattern here and cleaning out that low and relative equal lows here is the same pattern that this low up to this high and selling out to run out this short-term low is the same pattern. This, with this candlestick dropping down there, cleaning it out, that's the same thing this is. This is just smaller than this one here. So that is what I'm trying to teach you by repetition, going into the commentaries, giving you suggestions of what it should be drawing for, reaching for what's the institutional order flow, what's the bias, what's the target it should be drawing to. And all of that helps you formulate bias and or narrative. So if you know that the market's likely to do what I was suggesting in publicly, that it was going to drop down and target here, it delivered perfectly. That same element of expectation is shown here with this fractal there. Now, no, I did not call this move here live. I did not post it live, but I did post this one right here when we were in the second leg of distribution, and it delivered exactly how I teach you in mentorship. For you, as a hindsight study and proving that the theory still holds up, this whole market maker sell model is applied on this small little movement here. So you have to understand what the narrative is, and these models that I'm giving you, whether it be sell model or buy model, help you frame the underlying narrative. So that way when you go into this move and it's rolling up to here, you should expect selling. And when you do get selling opportunities and short opportunities, you hold on to them looking for it to run out that low. Once it does that, yes, it can continue going lower, but you need to be funding your position at that point, because it could go just simply to that low and then completely change direction and go the other direction. And that can be demoralizing if you didn't pay yourself. So let's look at the assignment for tonight. Your homework is the 1 hour chart on US 100 or the NASDAQ. And I want you to study this short-term high to where we are here. So what makes this high that low in terms of market structure, in terms of the things I teach you in its mentorship? What framework was in this high to that low? Okay, and charter members, you know you've been kind of like tipped off with part of this in here, but I left the second portion off because I want you to have the same opportunity to do the homework here, and then we'll review it on the Wednesday midweek review, which again, that is the last video for this week because it's Thursday, Thanksgiving. I will be with family on Thursday and Friday, and then we have the normal weekend. The markets are not going to be clean. They're not something I want to be a participant of on Thursday and Friday. As I mentioned last night, Thursday, Thanksgiving, a number of years ago, I had a position open in Forex with the FXCM broker, and they completely ran right through my stop, didn't honor my stop, and basically said, well, you know, that's the way it is. And I had to literally call in to close the trade while it was still screaming against me. My stop was not being honored. So I don't trade this week as a result of that. And I'm counseling you not to do it. Just stay out of it. And don't trust the market action and price delivery on Thanksgiving and or the day after on Friday. Just treat it as a short week, just like non-farm payroll. And then we will resume, obviously, on Monday. That will be the next commentary video I do. So again, so you understand me, tomorrow is Wednesday. It will be the final recording and commentary for this trading week. I will not put a video up on Thanksgiving Thursday. I will not put a video up on Friday for the weekend. I will not be a Saturday upload. It will not be a Sunday upload. The next video after Wednesdays will be this coming Monday afternoon. Okay? So I'm treating Wednesday as my weekend commentary. And with that, I'll touch with you tomorrow. Until then, be safe.